This interview is sponsored by ShakePay. They are Canada's leading platform on cryptocurrencies. If you're looking to purchase a Bitcoin or Ethereum, check out ShakePay, Canadian company. I personally use them. There's a referral link in the description below. Check them out. All right, we got Pierre Polievre on the show here. I think for those that are obviously familiar with my YouTube channel, probably needs no introduction, but I will give one for those who are unaware. Pierre Polievre is a former minister, a six-term member of parliament, and the Conservative shadow minister for jobs and industry. He champions the free market in which everyone gets ahead on merit, not government handouts, and people take ownership of and responsibility for their own destinies. Pierre, thanks for coming on the show. Appreciate it, man.
Great to be with you, Steve.
Looking forward to it. So I want to focus this conversation primarily on economics and finance again, which is really what my channel is all about. I think that in Canada, we are really lacking financial education. I think that what is happening right now is really unprecedented. I think that there's so much happening, and the pandemic has really exacerbated that. And Pierre has kind of been, one of the reasons why I wanted to bring you on the show is that you're one of the few politicians that I think is actually coming out and talking about, everything that is happening and just shedding a light on it, right? I mean, I think it's a little bit taboo, and certainly the mainstream media doesn't pick it up, which I want to also add before we get into the show. Bill C-10, Pierre is actually leading the charge on basically getting that thrown out. If you're not familiar with Bill C-10, the liberal government is basically trying to muzzle YouTubers such as myself with, they say anyone with several million views you have to be basically approved by the state. Obviously, if that were to pass, we probably wouldn't have this interview here with Pierre. That would not be allowed. So we're going to put a link in the comments below in the description where you can actually go and register to get that thrown out. So, but let's jump into it. So, Pierre, we're obviously here. We're in a very pivotal time in history. We've got massive government deficits, seemingly unlimited, incredibly loose monetary policy, and again, what seems like unlimited amounts of QE, or is for the average person, we'll call it money printing. So Pierre, what the hell is going on?
Well, it's bonkers, Steve. Your introduction is quite right. I'll give you some of the basic and astounding facts that if I had said these things a year and a half ago, most people would say it's preposterous that it could never happen. But let me put the numbers into perspective. Our deficit last fiscal year was $354 billion, which is 7 times the previous all-time record in nominal dollars. And it's the biggest in a share of GDP outside of the Second World War. At 16% of GDP, it is twice the size that it was in World War I, 8%, 3 times the size that it was in the Great Depression, which was 6%, and 4 times the size that it was during the Great Global Recession, 4%. So it is absolutely massive. The only other time it has been this big was in, I think, 1943, in the middle of the Second World War, when we were fighting Nazis, fascists, and the Imperial Japanese, at which point it reached 23%. But I would point out immediately after the Second World War, we immediately started paying down our debt. We had the biggest surplus in Canadian history in 1947, 5% of GDP, which would be $120 billion surplus in today's terms, something not even imaginable. And so how are we paying for all of this? Well, I had my staff dig deep into the sources of funds. And for the first time, maybe ever in Canadian history, the number one source of funds was not tax revenue. It wasn't even borrowing. It was the central bank. We collected $293 billion worth of taxes as a government, and got about $303 billion from the Bank of Canada. So in other words, the biggest single source of funding the government's operations in the last fiscal year was the central bank. Now this year, the numbers are even more interesting. So on a Monday, about a month ago, the finance minister announced a deficit that equaled $3 billion a week. Well, 2 days later, on a Wednesday, the governor of the Bank of Canada announced he would be buying government debt at the rate of, you guessed it, $3 billion a week. So the bank is basically going to print the entire deficit for this fiscal year. So we're living in a magical wonderland where nothing costs money, and we just simply turn on the printers and let the cash come pouring in.
Yeah, which I think obviously gets into the MMT, modern monetary theory, where essentially it's this idea again that the government can essentially run unlimited deficits, and the central bank, with the ability to print its own currency, can essentially fund that. And the only way that this becomes a problem, of course, is inflation. And again, that's the theory, and of course we can get into inflation and whatnot, because I think that we're certainly seeing it in aspects of our economy. But I wanted to ask you, obviously the Bank of Canada now owns 40% of the Government of Canada's bond market. Their balance sheet since the pandemic has expanded by 300%. And the money supply growth, the M2 money supply growth, has grown by 18%. This is actually the fastest pace of growth since 1980 in Canada. So we're certainly printing or expanding our monetary base at an unprecedented pace. In your opinion, is this not the single largest wealth transfer in history?
Well, it is, of course. It's a massive wealth transfer from the working poor to the super rich. Of course, the rich have no problem with inflation because it inflates their asset values. The rich don't deal in cash. They have a small checking account that allows them the liquidity to get through their day-to-day frappuccino drinking, but they principally hold their wealth in assets that go up in price as the money supply grows. So their real estate explodes, their financial assets, bonds, stocks, or other instruments become more valuable. But the working poor, who only have their wages and the money that they can bear to stash into the bank, that all becomes less valuable. So effectively, it is the inflation tax which hurts the poor, helps the rich, and allows the government to spend money it doesn't have. And you mentioned 1980. Well, we know that what happened in the aftermath of 1980, it was stagflation. And we had both high unemployment and high inflation. Unemployment was at 12%. Inflation was at 12%. Add the two together, you get the misery index of 24%, the highest in Canadian history. And we saw 650,000 people fall below the poverty line. And the highest suicide rate in Canadian history, 14.8 suicides per 100,000 people, by far the highest suicide rate. When the misery index gets high enough, people end their misery. It sounds, like a small thing. Oh, you're paying more for things. But when people can't pay their mortgages because inflation has driven up interest rates over 20%, or they can't afford to buy groceries, and simultaneously their wages have dropped because the job market is in chaos, well, they become absolutely desperate, and desperate times call for desperate and sometimes tragic measures. So that means that great human tragedy can unfold with these policies. So that, and not because of some numbers on a spreadsheet, is why we should care about this.
Yeah, I was going to ask you, because I think like the biggest thing, you can't simply just expand your monetary supply by 18% and not have repercussions, or you can't just add 18% more loonies into circulation essentially and just say, well, everything's going to be okay. Now, I the way that the central bank looks at it obviously is, well, we need to support the economy, to keep low interest rates, and keep the liquidity taps on to get the jobs back. And so I think one of the times, the pushback that I get obviously is, well, what's the alternative? Is it start raising interest rates and just no quantitative easing, and everybody just figure out? So like, what is your view? You must get some pushback obviously when you say to, Tiff Macklem at the BOC, hey, like, is it time to turn off the printing presses? What is the solution, or what is the answer?
Well, it depends on the question. What is QE meant to solve? When the Bank of Canada showed up at the Finance Committee, they told us they were doing QE simply to guarantee the functioning of the financial markets, because they're in March of 2020, immediately upon closing the economy for COVID, there were all kinds of weird contractions in the bond and stock markets, and the bank claimed it had to intervene to bust open those jams. They said there was a growing gap there was a bid-ask spread that was growing in the bond market, and they needed to close that by basically bidding up bonds. So Finance Committee gave them a pass while they did this extraordinary short-term measure. But then the markets came back roaring, right? Of course, bond market shot up, stock market shot up, and the QE kept on going. So that can't be the reason why they're doing this. Then they said, well, we have to avoid deflation. This will be a disinflationary event, said the Bank of Canada. Well, that has not happened either. In fact, 3 of the 4 inflation measures of the Bank of Canada are now above the 2% target. And there's massive asset price inflation that's not even captured by CPI. So that can't be the explanation. They said there could be a contraction of the money supply as terrified Canadians who are under the panic of COVID, threw their money under their beds and hid it away. Well, that hasn't happened either. As you pointed out, we've had the biggest growth in money supply in 40 years in my lifetime. So that can't be the explanation. So what problem are we actually trying to solve? Well, the answer, of course, is the government is spending money it doesn't have, and more money than it could possibly borrow from the markets. That shouldn't be taken as a given. For one, Canada's deficit is the biggest in the G20. So all the other 19 G20 countries have done a COVID response at a lower price, significantly lower price, and had, in many cases, better health and employment outcomes. So we shouldn't just say, accept that the deficit had to be $352 billion, or that it has to be $154 billion this year. So that's the first point. The second point is, even in the Second World War, we didn't do QE. What we did is we issued war bonds, right? We had the Canadian people bought bonds to support the war effort, and the government raised the money on the markets. Even in the war, we were fighting for our lives, and in the Great Global Recession, we also did not do QE. Yes, interest rates went down, but mass Bank of Canada purchases of government bonds and other financial assets did not occur. Look at the balance sheet in 2008 through 2012. It grew a little bit. I think the Bank of Canada bought some Canada mortgage bonds. But that actually was interesting. If ever there was an argument for QE, it would have been back then, because that was actually a liquidity crisis. That's what the 2008 crisis was. It was too many demands for cash and not enough cash available. That's how everything came crashing down. There were huge credit shortages. Businesses couldn't borrow, and so I wouldn't have supported doing it then. But the argument for QE at least would have existed then. The COVID crisis, has not been a liquidity crisis. It never was a liquidity crisis. In fact, the event logically would have meant less demand for cash, not more. People were banned from spending. They didn't need more cash. They needed the freedom to spend it, and they weren't allowed because of lockdowns. And so now we have more cash than you could ever imagine. The bank accounts of businesses and wealthy households have grown by $200 billion. Mortgage issuances are up 20% year over year in volume. We have a gusher of cash into the capital markets, which have reached summits the TSX has reached 125% of our GDP. Never before has that happened. And there are loans, they're giving away loans like water right now. So there's no liquidity crisis to respond to. And therefore, I believe this entire QE exercise was completely unnecessary and was only done for 2 sole purposes. One, to pump cash into the markets and boost the profits of very powerful financial corporations. And 2, to supply the Trudeau government with money so that it could appear to spend these exorbitant sums without consequence.
Yeah, I mean, I think obviously, if you look at the Bank of Canada's balance sheet right now, they're trying to taper, or actually in the process of tapering. But if you look at what they're tapering, they've kind of basically halted their provincial bond purchases, their mortgage bonds, but they're still actively growing the Government of Canada bond purchases. So that's pretty much where all their QE is now going. It's basically concentrated into that. The one thing I will give, maybe, I mean, I certainly agree with a lot of points he made. I think the one thing that I will say is I feel that, unfortunately, that the Bank of Canada, and obviously Canada as well, is that we are almost hostage in some ways to global monetary policy, where obviously it's not always that simple, just simply back out when every other global economy is printing cash and trying to basically actively devalue their currency. So I just think we're in a global currency debasement. But obviously Canada, I think, again, it's a very slippery slope. And I think that we're certainly starting to see, I think, some societal frictions because of this. I mean, we talk about quantitative easing. It says right on the Bank of England's website that one of the intended consequences of quantitative easing is to boost asset prices and basically create a wealth effect. So certainly you're creating an environment where you create these haves versus I think, as you call it, the have-nots versus the have-yachts. And it is obviously a slippery slope. And I was actually listening to Tiff Macklem today at the Bank of Canada. He was doing some sort of Q&A with these university students, and one of the kids, brave soul, asked him, he says, Tiff, lumber costs are up 250% year over year, and house prices are up over 20%. Is it safe to say that inflation is still actually 2%? And so, my question to you is, I mean, in your opinion, are we properly measuring the rate of inflation?
No, because housing prices are mismeasured. They measure housing prices based on monthly mortgage payments, which are artificially suppressed by QE, right? Because it brings down interest rates, and therefore, even with a much more expensive house, the payment is temporarily lower. So it looks like housing and shelter prices are down, even though we all know they're up. That's the irony. Well, they're not. The most recent measurement had housing and shelter rising 2.4% year over year. I mean, nobody believes that. I mean, nobody even claims that that's true, but that's how CPI measures it, because they're measuring the monthly payment rather than measuring the real estate cost. And of course, that cost is actually up more than 20%. If you go from March to March, it's up 30%. And I think that might actually be the biggest increase year over year ever in Canadian history, in an environment, by the way, where the GDP dropped by $120 billion. Anyway, but are we measuring it right? I think real estate has to be measured differently into the CPI. The second thing I would say is that we're only beginning to see the effects of the QE. The March numbers came out at 2.2%. That's for CPI. 3 of the 4 measures, as I said earlier, are above the 2% measure. The April numbers are going to be very interesting. They come out on the 20th of this month. In the States, as you know, inflation hit 4%. In April. Their data is just out. That startled the markets, and was very interesting about this. The bank, the Fed, and all the gang had their talking points ready. They what their talking points were. This is a transitory inflation, and it's the result of base level effects. What are base level effects? Well, they say that it's because in March and April of last year, there was an unusually low cost of goods and services because the immediate effect of lockdowns was to reduce prices, demand, and therefore prices, and therefore by comparison in the year over year, we get a large increase over that base level. That was their talking point. However, what was interesting about the inflation in the States is that there was large month over month increases in prices, which means it's not just a base level effect going back to the previous year. The prices are inflating in real time from month to month. And it'll be interesting to see what the Fed does, because the markets were terrified yesterday. As you know, they gyrated all over the place. Then they were down 2% on the day. But I bet you anything what's going to happen is the bank's going to come out and say, don't worry, everyone, we don't think this is inflation. We're going to keep printing money. Yellen, the Secretary of the Treasury, she accidentally went out and told the truth, which is that inflation is going to drive up interest rates. I mean, everybody knows it, but she dared say it out loud. And then, of course, the administration made her walk that back within 48 hours, and the market said, "Okay, thank God, the fantasy can go on." We thought that we were about to have a rendezvous with reality, and she came and said, "No, no, 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 that's okay. We're going to stay in Wonderland for a little bit longer."
Yeah, no, 100%. I actually want to touch that's a perfect segue because again, in this conference today with Tiff Macklem, he was already again, one of the questions was about inflation, and he said, well, we are going to hit 3% over the next couple months, and don't worry, it will be transitory. And so that
Right.
is again the drum that every central bank seems to be hitting on, and it's rather ironic because I think that um, there was a piece by Ray Dalio, obviously, billionaire, massive hedge
Yep.
fund, Bridgewater Associates. He wrote a piece back on LinkedIn back in 2016 saying that we would soon enter what he calls MP3, monetary policy 3, in which governments would essentially provide helicopter money that would be financed by central banks as sort of the last hurrah. I mean, I think that certainly in Canada, that's exactly what's going on. And obviously, it's being financed again by the Bank of Canada. Um, One other thing I want to touch on is so you mentioned obviously Janet Yellen, and she's saying we've got to if we do all this deficit spending and we keep sort of the central bank continues to finance it with ultra loose monetary policy, again we're going to run the risks of inflation. I think we're already seeing inflation in many parts of the economy. That the notion is that rates must rise and that they will rise. One of the guys who's been quite vocal on it is Russell Napier. But he argues that we could be entering a scenario where he calls it financial repression. And essentially that is a scenario where the government, the policymakers between the central bank and the federal government would essentially create a policy where you do a form of yield curve control, where you essentially, inflation is picking up, everybody knows that, and inflation gets too hot, the bond market freaks out, pushes yields up. But if you start artificially capping that, which is what the US did in the 1940s, basically it is essentially a scenario where you keep real interest rates negative. And so I don't know if you have an opinion on that, if that's in your opinion where the Canadian government and the Bank of Canada are taking this. Obviously with you can't I don't think you can execute modern monetary theory successfully, or again even trying to successfully do it without inflation taking off, and without, like, how do you shrink this pile of debt basically. And my opinion is that they're trying to do, you I think you understand as well as anybody, is that when you're faced with this level of debt, you have two scenarios. You either default or you inflate your way out. And I think that we're going the inflation route, but correct me if I'm wrong.
I agree with you. I think that's exactly what's happening. I don't believe that's the only option. I think there is a third option, which is to do as the great Benjamin Franklin said, which is a combination of industry and frugality. Industry in the broadest sense of producing the goods and services in great quantities that make our lives great and that pay off our debts. And frugality means living within our means, producing more and containing our consumption as a government and as businesses and so forth. That is the way you get out of this properly without this massive inflation tax. But no, I think you're absolutely right. That's the government's plan. It's to impose a massive inflation tax in order to pay off its debts and actually to continue to fund ongoing expansion of government. As for your question about yield curve control, that's what QE is already doing. When the central bank lowers its overnight lending rate to 25 basis points, and then it buys basically all the federal government bonds in the market, what it's doing is converting the bondholders into depositors of the central bank. And so it can continue to bid up the bond price until such time as the yield drops to or close to the overnight lending rate. And that's what they've been trying to do. What they're worried of, the reason why they don't just lower interest rates like they've done in the past, is because they think that they can lower long-term lending rates by bidding up bond prices through these large-scale asset purchases. And they've so far been right. There's no doubt about it. I mean, they have flattened, just to a great degree, they have flattened the yield curve. But the market it's incredible how much the market wants yields to rise. Like you still see the 10s and the 30s are significantly higher than the overnight lending rate, because the market understands that inflation is coming. And if the Fed and the BOJ and the Bank of England and the Bank BOC were not buying these bonds on monstrous scale, then the medium and long-term borrowing costs would be very different than they are right now. And that the governments who want to keep spending irresponsibly don't want that. The politicians are running the central banks right now. There is no, I like to see people say, why are you as a politician commenting on monetary policy? I'm not. I don't comment on monetary policy. I'm commenting on fiscal policy. The real question is, why is the central bank doing fiscal policy? Because that's what it is. This is fiscal policy. As soon as the Bank of Canada becomes the #1 source of funds for the government of Canada, it is doing fiscal policy and not monetary policy.
Yeah, exactly. You essentially marry the two, where they basically become one entity. And I understand that everybody says, well, they're independent. They're independent. Well, I mean, they certainly don't look
Right.
very independent. But yeah,
Right.
I mean, it kind of brings me to a point, because I want to add again another piece. There was a piece from Russell Napier, who's probably one of the most respected minds in the financial space. He wrote a piece in the Financial Post, but he says that at the end of June 2020, the world total non-financial debt to GDP reached 266%. That is to say that when we add the debt of the government, the debt of the households, and the debt of the non-financial corporations, it was 2.66 times the size of the world's annual economic activity. Total debt excludes the debt of the financial sector, as it is assumed to lend only to the other three sectors, and we don't want to double count debt. Canada's total non-financial debt to GDP is considerably worse than the global average at a massive 343%. It is one of the highest in the world. Napier goes on to stress that investors should not invest in government debt, as the purchasing power of these instruments will fall dramatically through a form of financial repression, which we talked about earlier. And again, I think that kind of brings us to the point that it seems like the only buyer of this debt, again, is the Bank of Canada, because I think that the bond market is well aware that if you didn't have a central bank, yields would be much, much higher. But that brings us to housing, because obviously when the Bank of Canada and the federal government work essentially in unison to essentially suppress free markets, we've now enjoyed the fruits of that labor, being mortgage rates at 1.5%, below the cost of inflation. And we now have a scenario where the national home prices, which is a market that I'm actively involved in, particularly here in Vancouver, national home prices as measured by the home price index now, which hedonically adjusts home prices, right? So this is not just saying, well, we sold more single family homes prices, so the average price is up. No. This is saying the average typical home across the nation is up 20% year over year. It's the fastest pace of house price acceleration ever. And it will move higher over the coming months. Again, at a time, obviously, when you have record unemployment. I mean, what do you say, as a politician in your riding, what do you say to aspiring home buyers, particularly younger generation?
My
Like, you
condolences.
must get that question
My
all the time.
condolences. Right now, there's no hope of owning a home for a young person unless they have rich parents. It's that simple. Unless their parents are super rich and can draw some equity out of their newly inflated house price to make a down payment on their kid's home, then there's no hope for your average kid to own a house. It is insane. Right now, Toronto is the fifth most expensive housing market in the world. When you compare median income to median house prices, Vancouver, where you're from, is the second in the world, behind only Hong Kong, which means that they are more expensive than New York City, London, Singapore, which is an island and by definition has a severe constraint on the supply of land. Um, all of these places have lots more money and a lot less land. A lot more money, a lot more people, and a lot less land, and yet somehow their prices are lower relative to income than our prices. Why is that? Two reasons. One, we don't let people build. We have enormous constraints on construction in and housing supply. Uh, Politicians, gatekeeping politicians, try to appease wealthy and privileged constituents by keeping development out of their neighborhoods. Everybody wants to be the last one that moved into the neighborhood. And then they want their local councillor to show up with a stop sign and say, no, no one else is allowed to build around here. And that supply constraint has driven up prices. But not only that, the money printing at the central bank has caused a 20% increase in mortgage volumes, and that has spiked demand. So the solution is actually very simple. Stop printing, start building.
Yeah. I think if you look at it, actually, so residential, one of the things that I touch on, actively to a lot of the people that watch the channel here, and in my reports, is that the bear case for housing, when everyone says, oh, you better look out, pandemic, obviously record unemployment, you would naturally think house prices would fall.
Well, the top housing authority in Canada predicted they would fall by 14%.
Yeah. And I don't think Evan's any dummy, but I think that it was certainly justified. And it probably would have been a welcoming scenario, to at least, because I think we had a pretty strong run up in house prices to begin with. So you could probably argue that we were probably due for a correction, a natural one. But anyways, we decided to suppress it. Residential mortgage credit growth. So the thesis was that, well, the banks naturally, typically in a time of crisis, you stop lending, or you at least tighten credit, and that starts to exacerbate things a little bit. What we saw again was the opposite, with the Bank of Canada coming out with these massive programs, the federal government, OSFI lowering their, capital reserve requirements, and you don't have to pay your mortgage. And so now we actually have a situation where residential mortgage credit growth is running at a 10-year high. So clearly the commercial banks are pumping out credit. I mean, is this something that concerns you? I mean, are these conversations that you have in the inner workings here? Like, I mean,
yes. Simply put, so a couple of things. One, you're right. The market was due for a correction because it was overpriced pre-COVID. Two, the natural market reaction occurred in March of 2020, which is prices began to pull back. And so did lenders. Interest rates on mortgages actually went up in the first month after COVID. Incidentally, I was in the market to renew our mortgage, and when I saw the bank lower its overnight lending rate, I called my mortgage broker and said, can you get me a deal? And he said, actually, it's not good right now. It's gone up. But then the QE started, and all the money started to pour into the banking system through central bank printing. And then the rates plummeted down to 1.49, 1.55, 1.59, and everyone got a steal. And then what happened then is people started to take home equity lines of credit to do massive home improvements. In fact, they were able to add new debt to their homes, do a $40,000 home upgrade, and have their monthly payments go down, which is like the central bank buying you a $40,000 renovation. I mean, it would be nice if that kind of magical transaction could happen, that a Tiff Macklin could wave a wand and give everyone a free gift certificate for a $40,000 home renovation. But unless people are putting $40,000 of output into the economy in order to justify that kind of a benefit, then it doesn't make any financial sense for it to be free. So anyway, but the bottom line is that households are at near record levels of indebtedness, about $1.75 of household debt for every buck of take-home pay. That's the highest in the G7. It's nearing an all-time record in Canada. And if you want proof that it is not sustainable, I can provide it for you. So in the fourth quarter of 2019, Canada experienced a 15% increase in insolvencies that hit out of nowhere. Nobody saw it coming. Just all of a sudden, people in the last quarter, around Christmas time, 2019, started to declare insolvencies. Why? The answer is that in the 2 years leading up to it, the Bank of Canada had raised its overnight lending rate from 50 basis points to 175 basis points, a very modest and gradual increase. But just raising rates to 1.75% over 2 years was enough to lead to a spike, a very large spike in insolvencies. You know what saved people? COVID. COVID brought in massive central bank funded cash payments, massive bill deferrals and tax deferrals, and massive drops in interest rates. Had there been no COVID, those increases in insolvencies would have continued. But here's the reality. The underlying cause of those insolvencies remains. People are still as indebted as, or maybe more than they were then. And now their government and their employer is far more indebted. So now we have $8.6 trillion of debt in Canada, household, government, and corporate combined, for every $1 of GDP. That is twice the historic average. It's the third highest in the G20, behind France and behind France, Japan, and China. And it is absolutely unsustainable if and when rates return to normal. So my thesis is inflation rises, then interest rates rise, and then we have what I call detonation.
Yeah, it's a stark picture. So I have the same view of you as you. I think it's inflation picks up. Instead of interest rates necessarily picking up, I think it's financial repression, which again is going to, I'm not saying it's going to be successful. It'll be equally painful, but they'll certainly try to do their best. Now, I got a couple of last questions I want to wrap up. You've been very generous with your time, but I mean, getting back to sort of solving this generational housing crisis, it's pretty evident that we've leaned so heavily on housing. I can speak for myself here, is that, the amount of human capital that's pouring into the real estate space, because people feel like it's the only way to almost make a living here, that, you almost want to get as close to the credit tabs as possible. So you become a realtor, you become a mortgage broker, a home builder. According to my good buddy, Ben Rabideau with North Cove Advisors, residential investment has accounted for 46% of nominal GDP growth since the first quarter of 2018. So housing,
Wow.
yeah, so housing is the economy.
Astonishing. Can you, I'd love for you to send me that. I'd never seen that one before. That's fascinating.
Yeah, I'll have to send it to you. And I mean, I certainly think you'd be a good, nomination for PM at some point. I know and then you got a lot of fanboys there, but how do you get Canada to the situation? We can't keep doubling down on housing, and we've talked about the debt loads. I mean, I think we have more debt than Greece did just before their debt crisis in 2012. So, I mean, what is the solution? We're just lacking. I just think we lack so much productivity and entrepreneurial spirit.
Right. Listen, we need to unleash the free enterprise system to produce more wealth. That's how you expand the denominator in the debt to GDP ratio. You grow the GDP by unleashing the productive forces of the free enterprise system, make Canada the fastest place on earth in which to get a building permit, bring in true free trade between our provinces to grow household income by $6,000 per year, according to one U of A study. approve pipelines so that we can get world prices for our oil rather than having the Americans rip us off. And by the way, have a transnational pipeline so that we no longer have to ask the Americans for permission to sell Canadian oil to Eastern Canadian consumers. We need to reform the tax system to reward rather than punishing work, savings, and investment. We need to simplify and streamline the tax and regulatory system to get out of the way and let production occur. We need to fix our patent system so that we keep more of our intellectual property here after it starts generating income. These are among the ideas that we need to also reform the tax and regulatory policies that block First Nations communities from inviting commercial and resource development on reserve. And also, as a realtor, you'll appreciate this, allow First Nations that want to change their housing and land use policies to have the ability to issue collateralized mortgages, so their people can actually own homes, build up credit and collateral, so that they can participate in the property economy. These are all things that would unleash the power and productivity of our economy and allow us to earn in the incomes that will pay off the debts and fund our future.
Yeah, I totally agree. I mean, speaking of free markets, just kind of wrap up here, but speaking of free markets, I think that certainly one of the things. I mean, there's a whole host of problems, but I think one of the problems, and I know you've alluded to it, is obviously the housing supply. I mean, government's obviously getting in the way at the municipal and the provincial level, even the federal level in some circumstances. You know, I have to look at one of the things that always kind of, I'm a little bit scratching my head, but so Scotiabank comes out with a report. It says Canada has the lowest number of housing units per 1,000 residents of any G7 country. The number of housing units per 1,000 Canadians has been falling since 2016, owing to the sharp rise in population growth. I mean, I know that the government today is ironically ramping up immigration targets. I mean, they're so hell bent on hitting these massive immigration targets, but we're in the midst of a housing crisis. We can't even adequately house our existing population. I have to wonder: is this, going back several years now? Is this a policy mistake?
The issue is not the number of people; it's the number of houses. We have room. We have more room than any other country on earth. Look, we've got more space in Canada where there's no one than there is space where there is anyone. We have one of the least densely populated nations on planet Earth. I did the calculation a while back. If you spread Canadians out evenly across our land, every Canadian would have something like 4 football stadiums to himself. We have plenty of land. That's not the problem. The problem is we're not allowed to build on it. We can't get anything done in this country. We can't expand our 400 series highways in Ontario. We can't build pipelines to sell Western oil to Eastern refineries. We can't, it takes 167 days longer to get a building permit for a warehouse in Toronto than it does in the United States. We are ranked 36th out of 37 OECD nations for the delay times to get a building permit. We are one of the slowest places in the developed world to get anything built, including and especially housing. And that is the problem. It is not a population problem. It is very simply a problem of gatekeepers blocking construction while central banks print money and stoke demand.
I think that's a perfect way to end it. Thanks a lot, Pierre. That's been fantastic. And any parting words?
Yes. Well, listen, thanks, Steve. This has been great. I'm glad that we have entrepreneurial news outlets like yours, news and talk outlets like yours that provide a diversity of opinion. As you know, and you mentioned, the government is trying to shut down your voice and give preference to government-approved voices to sanitize the debate online. So we can go back to boring government-approved talking points and return to the party line that Orwell warned about. Let's not allow that to happen. sign my petition to fight Bill C-10. You can find it as the top post on my Facebook. It's pinned to my YouTube page. I appreciate your subscription as well. And click on it, sign your name, add your voice. Let's fight back so that Steve and many like him can continue to tell the truth and share the message.
Fantastic. And we'll put a link below, again, in the description, where anyone can go and fill that petition out and make it happen.